What is going on YouTube? Hit back making another brand new Crypto TV episode. In today's video, we are going to be looking at XRP, Ethereum, Bitcoin, as well as the S&P 500. Specifically, what we have to go over in today's episode is in regards to XRP pretty much plateauing or starting to plateau within its price level here. We've hit a few resistance levels as well as becoming overbought, as you can see on the relative strength indicator, and I'll show you why this is starting to peak because we're hitting some very strong resistances on the weekly charts, which could cause for a correction to the downside. Now, fortunately, we have managed to break bullish outside a massive bull flag formation here, but that doesn't necessarily mean we're just going to keep going straight up. There's more than likely a good chance we will be correcting downwards here, but continuing the uptrend and the rise, which is very exciting if you ask me. We're also going to be going over the three-part cycle that takes about 4 years to finish and where we are in that cycle, which is definitely some good news too. Now, we're also going to be looking at Ethereum, which you can see is continuously trending upwards here. We've managed to break through another resistance level over the past couple of days, about 4 days ago. This has now allowed us to regain some footing and should allow us to continue to climb up, which is also very exciting. Now, moving on from Ethereum as well, we'll be looking at Bitcoin, which hasn't just yet broken through that major resistance to continue to trend upwards here. But you can see that for the most part, we are kind of heading up. I mean, it's more of a consolidation, but we are slowly going higher, while the relative strength indicator is slowly heading lower. This is definitely a good sign, as it does allow some healthy recovery here within Bitcoin to potentially have us go to the upside here. The only thing we have to pay attention to is potential, bearish crosses on MACDs, potential swings to the downside here, and bearish crosses on the moving averages, but I'm not seeing any of that just yet, besides the MACD, which isn't too bad here. And then we are wrapping things up with the S&P 500 if we have time at the end of today's video. As you guys know, yet again, another bull flag formation, and you guys love to make fun of me for literally anything that I say. Bull flags have just recently started to form on S&P 500 and XRP, but prior to that, we were talking about bearish divergences, descending triangles, descending fractals, so on and so forth here. So the fact that now we're talking about the same bull flag formation, and that's because it is the same bull flag. This took, the timing of this was huge. Taking the date range here, we're talking about something that lasted a total of, 58 days, and now we're continuing the break to the upside here, which is a total of 67 days. So it's very relevant that we continue to talk about this because we broke out of the bull flag. So it's very funny, but love you guys, love all your comments. It is very funny. It does make me laugh, so I do appreciate that. But we will also be talking about the S&P, which seemingly is starting to break outside its bull flag formation here. Yes, I said it again, and most likely heading to the upside here, which is exciting if you ask me. But with all that being said, definitely make sure to smash the like button, turn on post notifications, subscribe, and let's dive into today's video. So as you guys know, I do have a second channel, and I know I don't like to promote it here, but I do know that you guys are interested in some of the things that I do, for my extracurriculars here. But I did just post a video 2 days ago in regards to talking about the car that I bought, which is crazy, definitely in over my head, but it is a project nonetheless. And I wanted to share that with you guys. So make sure to check it out. Link is down make sure to check out my second channel. Link is down in the description below. But I'm basically going to try to rebuild a car that was in an accident. Never had done something like this before. Very rarely have I worked on cars ever besides changing oil and stuff like that. But big challenge, jumping right into it. So we'll see, if I can do it. So if you're interested, make sure to check that out if you have another interest in cars. But moving forward and diving into the technical analysis, you can see we are tracking the potential break. I did talk about another breakout coming and starting to head to the upside, which is obviously the S&P starting to rally up, which you can see is what we drew. And then we have these previous rallies, which you can see we've consistently made videos on for many days now, which was the formation of the symmetrical triangle. And it's funny because some people say I'm always late to the breakout on XRP, which I think is so far from the truth. I literally have 6 days ago mentioned the symmetric, it's so funny because I can pull up the comments where you guys are like, oh, you're late to the party, you're late to making the video. Yeah, that was one time because I was on a cruise ship in the middle of the ocean. I'm not there anymore. And I literally called 6 days ago on the cruise ship, nonetheless, right here, that they are going to see a break to the upside here while we fill out the symmetrical triangle. And as you guys can clearly see, that is exactly what we did consistently every single time. So you guys are funny. You make me laugh. I do appreciate that. But diving into the other technical indicators here, you can see top 10 cryptos look okay. Market's down 1.22%, 1.17 trillion global crypto market cap. 24 hours looks okay, pretty much consolidating. XRP is kind of stagnating. For the most part, we're kind of flatlining out. over the past couple of days here. That's USDC. XRP flatlining out, Cardano flatlining out, for the most part where we've been. Now you can see XRP is continuing this break to the upside here off the bull flag. It's expected, textbook bull flag formation here. Once we confirm breakout, that's when we rallied up. We formed another symmetrical triangle here, which we watched, and then this broke bullish. Once this confirmed closure above here on the daily, that was an easy buy-in for a long opportunity, and now we're starting to hit resistance. Why? Well, because A, we're overbought on the daily charts, and B is because if you check it out, we are retesting and battling not only near overbought, and we definitely were overbought. When we were up here, we were overbought on the weekly moving average, which is a huge signal of potential swings back to the downside here. But you can also see that we are having a very tough time. Not only did we retest major resistance at 59 cents, but we're reversing back down because we're trying to get intertwined within the moving average. And if we kind of swing back, you can see the similarities that we've had here. We did have some trouble getting through it, immediately broke bearish, but you can see there are some movements here that we do have to consider. And there's a chance that since we're getting very close to that same pattern here, it almost looks identical. I mean, if I take this and move that here, right? Let me just trace this out for you guys. If I take this now, look at the beginning here and look at how it is. If I move this right here, it's almost identical here. We have the same swing up. You can see very similar, same swing up, rejection, same swing up, rejection, and then we have the rally, and you can see that's the first rally starting here, and you can see we're now starting to enter it. So I have a good idea that we're probably going to head up higher here. We may enter overbought, and then we're going to see a big drop. That's my opinion here. But obviously, you can take advantage of this. It's definitely a little riskier now. We'll see how this weekend closes us. We should probably stagnate a little bit now that the weekend's upon us. But there's a good chance we'll consolidate a little bit. Markets might open back up. We might see a big run to the upside here. But obviously, we do all of our trades on BidFi, the #1 cryptocurrency leveraging exchange that I like to use on the channel. We've been using them over 2 years now. They've been incredible, and I mean incredible, in regards to leverage trading and, using it as just an overall exchange in that sense here. But you can buy long, sell short, leverage trade, create stop losses, take profits. Everything you could possibly think of is offered here. Long, short, leveraging crypto. You can see they have even a demo account here, which is another really cool feature. You can get $100,000 in Monopoly money to test your skills using the platform to see if you have what it takes to actually trade. So not only is the website free to sign up down in the description below, but you can also use their demo account with 100K and just practice and see if you're good at trading. If I say I'm buying in and you wanted to try to do the same thing, you could use the demo account and it's completely risk-free. So I always recommend using a demo account because it's free, it's not real money, and I always support that here. And then what's also really cool is they offer XRP, which not many exchanges offer, which is the best part about BidFi at this point. They have Bitcoin, they have Ethereum, they have all the major cryptos, but they have XRP, which makes it stand out. Not only can you leverage trade XRP, but you can also use it in their spot trade, which means you could just buy it and hold on to it. As you can see, literally just click classic and you'll be able to do that. Now, obviously, with any exchange, it's always best to take your money off if you're going to be holding on to things long term. It's not good to just let money sit in an account online because who knows what could happen. But moving forward, the best part about BidFi is they do offer now a sign-up bonus of up to $2,888 completely free by signing up with the link down in the description. So definitely make sure to jump on that because it's free money and I don't know how long it's going to last. Now, some of you guys might be a little upset that maybe you've joined it or joined BidFi a couple of months ago prior to them offering the welcome rewards. Well, lucky for you, they just added this for everyone. So if you've already signed up, there are still perks that you can get. So by clicking welcome rewards here, you can see you can still get up to that $2,888. There are still some things that you can get if you haven't already done it. So make sure to check this out. Super cool. Link is down in the description below. But moving forward to Ethereum and Bitcoin here, you can see we are in a consolidative pattern right now, consolidating for the most part, filling in the gaps here, and we are starting to head to the upside here. And it's definitely interesting because I've said it and I'm saying it again, that there is an off chance we could swing to the downside here. I've been saying that there's a chance we could see a short back to moving average here. And the reason I say that is because we're nearing overbought and we're seeing bearish crosses on most of these major cryptos here. But at this point, to play it really conservative, if we see a break above this resistance, that's pretty much where I'll be buying in. We can almost draw it something like this. Like this is kind of this pattern here. This is the resistance level up top, and this is the support that we're dealing with. Now, I really don't like to trade inside channels here, but ideally, if we break through this, a conservative buy-in would say we're going to be breaking to the upside here, which would be a conservative play. Now, if we start to correct as an aggressive trade, you could buy in once we break below here. That would be an aggressive pattern. And then if we break through this, this is more of a moderate trade, and then that would short us down to moving average. And then below this, for a drop would be more so a conservative outlook here, but do as you will. Definitely a risky trade to be doing anything inside of these channels here, in my opinion, but I more so see this as the easiest entry point moving forward. And that's pretty much the same thing applied to Bitcoin here, where this is a bit of a resistance, buy in there, swing to the upside. That would be an easy conservative trade. If we correct, there's a good chance this is the aggressive play. And then if we break through this right here, this would be the conservative drop to the downside here. And moving forward to the S&P, I'm a strong believer that because we have this beautiful bullish flag here, and we just confirmed yesterday breaking, or 2 days ago breaking through it, we are now going to streamline straight up to the upside here, which is also very exciting. And that's where I expect to see these markets recover to. It'll be the newest high, most likely, or a double top at that point. Now that I'm looking at it, could even head up higher than that. But regardless, it'll be potentially the newest high we've seen in a very long time, but also confirming that we are creating higher lows, which is exciting. So hopefully the next time we drop like this, and then we'll have another higher low pattern. So definitely confirming that approach. So I am excited with that. But with all of that being said, that is going to wrap up today's video. Make sure to smash the like button, turn on post notifications, subscribe, and I'll see you in tomorrow's episode. Peace.